Hello, everyone, and welcome to another one of our Better Investing online tools tutorials. Tonight's session is all about the SSG Plus, one of our basic tools to analyze stocks. Susie Artsberger will be our tour guide this evening. She's our Director of Information Technology at Better Investing. She is the team lead for the people that develop these tools. So we really could not be in any better hands. So Susie, without further ado, I'm going to turn things over to you so we can get this party started.
Awesome. Is it a party?
It is.
I'm excited.
Good.
Okay. So just want to thank you, Ann, thank our backroom staff, and thank everyone who is taking the time out of their evening to attend our webinar live. And let's get started. This is our standard disclaimer, and you may see some tickers tonight, but please do your own research. Don't go out and buy those. You may also see us go off to some other websites that we're going to show you as part of our research. It doesn't imply that we're endorsing those websites. They're handy resources. The session is being recorded for future use, so we will be able to show it to you again later if something happens or you have to leave. In tonight's webinar, we are going to do an overview of the SSG Plus, how you access it, how you use it. This is not an in-depth discussion of our stock selection guide methodology. We will do a stock selection guide. We're going to gloss over or move quickly through some of the forecast judgments. Our guide in this whole process is what we call our Quick Start Guide. It is available as a handout, and the handout can be downloaded from the chat panel or control panel and go to webinar. You can print it off if you'd like, or now or later. When we post the webinar on the Better Investing website, we'll also post these handouts as well. Then another handout that's out there is a PowerPoint with screenshots of all the slides. We're going to be working mainly live tonight, but you may want to check out that other handout as well. We're also going to give you an overview of our member sentiment function, which can help you with another reference point for judgments. So with that, let's begin. If you have any questions along the way, please, please, please feel free to submit them. We usually get to most of them during the webinar. If there's any left over, we'll try and circle back and answer you after the webinar. If you ask a question but it's not answered immediately, it may be being held to be asked live during one of our question periods. As I said, we are recording the webinar, and that recording usually is available within 24 hours, and I'll post it on YouTube. It will all be a link through a follow-up email that you will get. Sometimes it takes us a little bit longer. In the future, just know that if you can't attend a webinar, but it sounds intriguing, sign up for it anyway, and that way you are on the automatic email notification if there's a recording for it. Let's give you a little bit of an overview of that quick start guide that I mentioned. So this is what it looks like. If you happen to attend our national convention, they're hanging out all over. We have a number of quick start guides, and they're this little handy folded pamphlet, if you will. The one you're going to download is a bit easier to print out, and it fits on a sheet of paper. We have a number of quick start guides available, generally one for all of our products. And what they are is an easy step-by-step way of getting from start to finish. And that's exactly what we're going to do and show you tonight. Also available on our Help and Information tab. I'll get to that when we're live in the tool here. And that Quick Start Guide handles these steps. How to access our SSG Plus tool, and how to open a new or saved study, so from fresh or one you've saved, how to visually analyze the history and quality, the screens and data that are related to that, how to review peer data, which is exclusive to our online tools, how to forecast sales and earnings, how to review our PE history to help us forecast prices, and review your potential return after you're done with all that forecasting. And then finally, how to save, share, print, and research. So I have I see a question coming through about are we going to cover more than this, specifically some of the portfolio reports? Not at this time. There's a lot to cover in the next hour, so we have a different portfolio webinar. There's one on YouTube. It's also linked from the Better Investing website if you want to learn more about our portfolio reports or about any of our other tools. So when I say any of our other tools, here's what I mean. We're going to be talking about the SSG Plus tonight, but really the Plus membership has more going on. From a tool standpoint, you get all of these things. You get the core SSG, you get tons of classes and education in the Plus membership. You get our company research page, you get our stock comparison guide. All of these have integrated stock data, meaning you don't have to do a separate download or anything. We also, for those of you who might be familiar with some of our older desktop tools, the Plus membership includes the stock data service. If you are unsure if you have a Plus membership, then please just give us a chat in the chat panel. We probably won't look it up tonight, but I can certainly feed back to you later and let you know if you have this or not. Or the better method is to go into the Better Investing website and try it. If you have it, you'll be successful. If you don't, it'll give you a message that says you don't have access to this service. And I have to tell you that a lot of people have access to this SSG Plus tool and don't even realize it. We do have two tools. Let me back up a little bit. We have a core SSG tool that is an awesome step-by-step way of learning the stock selection guide methodology, which is helping find quality growth companies and then figuring out if they are trading at a reasonable price right now or what a reasonable price might be. The SSG Plus is the exact same methodology and concepts, but presented a little bit differently. So these two tools work on the same set of data. One is for, it's got more basic functionality and it's step by step, and the SSG Plus is got a little bit quicker workflow. And that is one of the biggest differences between core SSG and SSG Plus. About half of our members have core and half have SSG Plus. So I'm not sure which, or half of our members with tools have core and half have plus. I'm not sure which group you're in, but just know that this is the main difference. They are both cloud applications. So one of the biggest bonuses there is they work on a number of different devices because they are browser-based. Yes, you do need internet, but internet is incredibly prevalent these days, so that is increasingly less of an issue. We can support Macs and PCs and mobile devices and tablets, so we're finding that is incredibly convenient. Core SSG is step-by-step. SSG Plus, will show you, is really accomplished in 2 pages. They both have the integrated stock data. There's not a separate data service or something you have to load there. There, in general, are more features and functionalities with SSG Plus and a little bit higher annual price. Now, this is the all-in price. If you're a club member, you pay a club dues, a club member fee, and then there's an incremental cost for a tools membership, core or SSG Plus. Regardless, it adds up to either $93 a year or $110 a year. Although I will tell you, it pays to be part of our email list because we often have specials, and to make this number or these numbers, you get a discount. So getting back to, there are just more features and functionality in SSG Plus. You have more graphs, same peer comparison, or same data, same way of comparing with peers. SSG Plus has preferred procedure, it has more quarterly data, it has more portfolio reports, more screening options, the ticker heat map. Now, these last things that I mentioned, screening options and ticker heat map, are really about finding stock ideas. And we do a special webinar for those. There's also a quick start guide for all the different ways Better Investing can give you stock ideas of quality growth companies of various flavors. You know, the might be more of a value screen, some might be more of a quality company screen, and so forth. But we're not going to get into the screening and ticker heat map tonight because we're just not going to have that time, and we've split that out into a different webinar. Both of them, both memberships come with access to the stock comparison guide. So that is the biggest differences you'll see right here. It doesn't matter which one you use, you will get the same results. We try very, very hard to make sure if you put in the same judgments, you're going to get the same results. And at the end of the day, if you want to print out the SSG, they are printed out identically on that original style SSG form, or you can make a PDF that looks like that. So let's talk a little bit about how to access. And the number one way that people access the tool is by going to the Better Investing homepage, which you're seeing here, and looking at this green box in the corner here. So let me blow that up a little bit. We've got a number of options. I can enter a ticker up top here and click go and go directly to that stock study or stock selection guide with that ticker. I can go to my studies, which are all of the studies I might have saved. I can also, from that page, the My Studies page, I can enter and start a new study. I can research company data. I can go to the stock comparison guide here. So we're going to be working right here initially in the My Studies section. And that looks like this. I'm going to show you a few slides that are static, and then we're going to go live. So when we get into the My Studies section, let's get a little bit acclimated. There will be a button here that says Start a New Study. We will be using it. There is a bar here that says Portfolios. When we're in our portfolio creation and reports, we will open that up and use that. But again, that's beyond the scope of what we're going to talk about tonight. All of the studies that you see here and companies listed are my individual saved studies. All you do is click on a row and it will open that study. Each of these columns are sortable. They're filterable. And there is a way to update studies and so forth and delete them. We'll get back to that live, actually more towards the end of our webinar. Once we open a study, I'm going to show you this screen here to get us acclimated again. This is the front page or first tab of the stock selection guide as viewed in SSGPlus. Up at the top, you have some navigation. On the left, you have tabs to the various tools. So there is a tab, a file folder that you go to for My Studies. For screening, that's the little magnifying glass. SSG, this is where the bulk of our work is going to happen tonight. Stock Comparison Guide is abbreviated as SCG, and then the question mark down here is for a Help and Information tab. We have a menu. We have navigation at the top, and we have these three tabs. What's nice is you'll see we have more room for other tabs, and we hope to build those out in the future with other functionality. But the first tab is about analyzing growth and quality. That's the visual analysis. The second one is about valuation and return. It's about looking at PEs and projecting high and low price. And the third tab is for quarterly data. For Plus members, we have a very nice quarterly data webinar that spends an hour here in depth on what you can do with quarterly data. We'll perhaps see it tonight, but we're really going to be working in these first two tabs, which are the basics of getting the stock selection guide done. We have a graphical display of data in the center. That same data, you can see it as a tabular display of data, a legend to turn data points on and off, and a button here to look at peer data, which is a very, very cool feature. So let's go live so you can see all this stuff in action. Before we do that, though, Anne, are there any more questions that?
No, not at this time, Susie, but I would encourage people as we go through this to go ahead and ask your questions, and we'll get Susie to answer some of those. And we do have a number of people working in the back room, our volunteers, that will also help us out.
Okay, Perfect. Thank you. All right. So hopefully what you're seeing, let me make sure I can see what you're seeing, is a live view of our member homepage. So we have a number of tabs across the top where you can get at other website features, but here is that green box area on the right for online tools. And here's that My Studies button. And if I click here, it will open into the My Studies tab. And what you'll see is all kinds of studies that I have. And if I scroll all the way down, I have 612 studies. That's a lot. That's probably way too much. I do a lot of different analysis, so that's frankly not unusual for me. Your list is probably going to look a lot shorter, although Anne's looks pretty long as well. I think she's about, what, Anne, 400 or so studies?
I don't know. We both have way too many. Hundreds,
right.
700, yeah. 600, I don't know, somewhere in there.
Okay. So I mentioned before that we could click on any one of these rows and open that particular study. We can also sort by the column headers, or which, the company name, the ticker, the name of that I've given the study, the date created. I can change the number of entries that I see at one time here. I can scroll all the way down and page through my list. So we'll get back to that in a little bit more detail at the end of our webinar when we save our study and update it. But for right now, I'm going to start a new study. And our ticker tonight is Biogen, B-I-I-B. Now, I knew the ticker name, but what if I didn't? So I'm going to start typing Biogen in the box, and it will bring me up my options. I can click right on here. I can put the ticker in. And when I put the ticker in now, something interesting happens. You'll see all of my other Biogen studies. So here's where that disclaimer comes into play again, because I do own the stock. I'm happy to talk to you about it, but please don't go out and buy it based on what I'm talking about. So I could pick one of the ones that I have in here already, but we're going to start a new one that's special for us tonight. I put in the ticker and I click New Study. And what happens is, voila, it comes up, should be within a second or so. Now I do want to point out, we're cloud-based, we're internet-based. I run this application perfectly fine, and it's on my mobile phone, on my iPad. You see it work on my computer. It works pretty well on even a mobile phone type connection. So that's about how fast it should come up. And let's kind of navigate around with what we have here to play with. So the view you're seeing here is very similar to the PowerPoint view that we saw earlier. Left-hand tabs, top tabs here for navigation, and let's kind of explore a little bit more. This top bar here, where it has the company name and the ticker, I can mouse over that bar and see more information about the company. Sometimes people come in and they open a ticker and they don't actually know what the company does. They get, someone gives them a ticker or mentions it and they just open it up quickly. So this can tell us for this study what the closing price is. This is yesterday's closing price, when the last fiscal year is and when it ended, the sector and industry, and a little description about the company. So I find that when I'm opening saved studies, I use the closing price and date pretty heavily, so I can double check really quickly when this the date of the data in the study. So don't forget about mousing over that top bar there. Now remember that graphical area here that I showed you. As I'm moving through the screen, you might be able to see that there are a lot of little pop-ups that appear. And that's one of the nice things, is that if you mouse over certain sections or even various pieces of data, you will get more information. So on the graph, I can just mouse over these circles and see, for example, what the sales are. Now, how would I know that this is sales? It's because it says it's green. It's also green. And if I go to my legend here, I see sales are in green. Now I'm going to zoom my screen up a little bit. See, sales are in green. Pre-tax profit is in pink. High prices are in black. Earnings are in blue. And this is an actual live legend. So if I click sales, it toggles the display. It goes on and off. So I clicked it off. Now I'm going to click it back on. So I can do that to any of these. Let's say maybe the lines are overlapping and I want to see them singly. That might be a reason that I would click there. There are also some other data that is available that you can click on. So book value, free cash flow per share, dividends. Biogen doesn't pay a dividend, so we don't see anything on the screen here. Long-term debt, net income, and shares outstanding. So I will point out right now we can see the shares outstanding going down, and that might be important in our projection. So keep that thought going. Now let's say I've got some lines crossing here, and another way of making things a little cleaner is we have movable line. I can drag that line up or down. If I want to reset the chart to the default, here's a reset chart button. And then the line will go back. And I can always turn the lines on and off. The display that you see here with the sales, pre-tax profit, and earnings and price is our default display. So every study is going to open up with this default data turned on. So some other things we have going on here as we look at the visual portion are the closed circles. That is annual data. And let me reset my view a little bit here. I'm going to scroll down a little bit. So the 2014 earnings per share is $12.37. That is the same data that we see down here. So the annual data is in closed circles. The open circles are the quarterly data. I'm going to move my cursor out of the way so you can see this a little better. So we have 3 quarters already on the books for Biogen here. And we can see that sales has kind of been tracking up in a nice little line. We see pre-tax profit was going up, but maybe the last quarter has trended a little bit down. So we can see a bunch of information right off the bat visually. Some other lines that we have going on here are the light colored lines. And if you mouse over it, will give you the information. Those are our analyst estimate lines. So on some companies, particularly larger companies or those that are covered by more analysts, we will have data in this box that's called analyst consensus estimates. We get a 2-year estimate, and that's year-over-year growth rate, and it's a consensus estimate. So what this is Morningstar aggregates and averages the data. These are averages or means. They average the data from a number of analysts who have put their estimates into a database. So these are the averages for what Morningstar has collected. And in this case, it's 5.2% for sales. And you see the sales line is shorter, this analyst estimate sales line. And a long-term estimate for earnings, 8.7%. And that's this lighter blue line. So at a glance, I can see how the company has performed in the past and what the estimates are going forward. The dotted lines here are flat, and the reason that they are flat is we have not made any projections, so they are essentially at 0 growth. Once we start making projections, they will move up into their proper position, and we will get to see them on the same graph as our history and as our analyst projections. So we'll get to that in a minute. So that's pretty much what you can see on the graph here. I will point out that we have a panel on the right here that shows us our recent quarterly figures. So at a glance, I can see what the latest quarter sales and earnings were, what that same quarter was a year ago, and the percentage change. So I can see that year over year, they were up 6.4% with sales and up 13.5% for earnings. Great. So that's a nice way of evaluating, that last quarterly data set when it comes in new. At the top, there's a projection starting point. When we start to make projections, we can choose to start at the last quarter, and that's usually my default. But some people like to project from the last fiscal year, and you'll see our dotted projection line move back to the last annual. Or you might want to project from the end of the trend line. So this is the least used option, and it's typically used either on a cyclical company or a company whose last year was a bit of an anomaly, either much better or atypically worse than the previous years. And you might decide that the trend line gives you a better starting point, that the company is going to recover or go back to the norm, and then you want to use that trend line. But like I said, not many people do, and it's our least used option. Quarter should be your default, and if it's not, I'm going to show you right away. There are preferences under Tools. Go to Preferences and pick what your projection line start point default is. Okay, moving on down, we talked a little bit about our fundamental company data. So when we're looking at the visual analysis here, or as we call it, analyzing growth, what we're looking for are companies that are moving up and to the right. And so Biogen certainly kind of has that in spades in terms of sales moving up and to the right. How much? Well, let's look down here and see for that total period of time, that growth rate is estimated to be about 15.5%. And why do I say estimated? Because when we measure growth, we don't go from 2006 to the endpoint here and figure out a compound annual growth rate. What we do is we draw a line through the middle, and that's the line that is statistically to the middle with the least error on either side. It's called the least squares, and then we figure out the growth rate of that line. So that's what the 15.5% represents. If I look at remember our blue earnings line, we had a year here that was much lower. So I'm going to hover over here. Our blue line for earnings growth is a little bit steeper. And sure enough, if we want to put a number to that, that's 34.5%. So they're both growing. That's great. Pre-tax profit gets a little bit less emphasis, but what we want to see is that it's growing in parallel with our earnings number. Now it's got a little bit less growth rate, but that's certainly fine. So we're looking for as much as possible up, straight, and parallel, but that also includes price. So remember those price bars? They're in the black, and we're looking for them, the price, to grow along with earnings. And you know what? That has happened, and I'll tell you what, I'm going to clean this up. I'm going to take off pre-tax profit, and I'm going to use that movable graph line concept and say, here's my earnings. I'm going to put it kind of in the middle here, and they're pretty much growing the same, especially in the later years. And then we see price actually moving away from earnings, meaning it's growing faster than earnings. And sure enough, this company has had some great price appreciation in the last couple of years. But then, most recently, I'm using my left mouse button to drag, by the way. Most recently, this black price bar has come down. And this price bar here represents the 52-week high and low, and the red line is the latest closing price. So I can see at a glance that price has not only followed earnings, but done better than earnings, but recently has come down. So there will typically be a story in this situation, and we would need to do more research. Again, that's a little bit beyond the nuts and bolts of getting through this, so we're going to just leave it at that. So we have our visual analysis, and if we feel that this company has enough up, straight, and parallel and a decent growth rate, then we can go on and take a look at management. Now in this tool, it's all on the same page because we are looking at quality, we're looking at balance sheet and financial ratios and so forth, and they're dealing with historical data. So before we go on to forecasting, we're going to handle our quality analysis or evaluate management. And we have three primary numbers we look at here. We're going to look at our profit margins, but these are pre-tax profit margins and what those margins look like. And what we're looking for here is if they are at least steady or growing. If they're growing, if they have the characteristics that we like, this will be in green. And we see that. We actually see a little graph of those profit margins. We can look at the numbers and see them go from 33 to 35 to 40 to 44. We can see the last 5-year average, and we're generally above the last 5-year average in the last couple of years, so that's good. Another metric that we're looking at is percent earned on equity, or also known as return on equity. Now, we like to see companies as a guideline 15% or higher, high teens, and we see not only that in the last 5 years, but a growing trend for return on equity, so that's good. And then one of the final things that we like to look at is a debt ratio. And in this tool, we're looking at the debt to capital ratio. In general, debt to equity or debt to capital both do a fine job of being a debt ratio that can help you analyze your balance sheet. We chose debt to capital, but the basics we need to know are we're looking for steady or decreasing debt. Now in this company, we have a 41% in the last annual year. So again, there's a story here. I'll tell you what the story is. They took out a loan to do actually, one of the things is to do a share buyback, but they took out a loan. They are, already paying it off, and that is one of our research points that, as we did research on this company, we would want to take a look at. Ideally, I'd love to see this graph in green as well. It just isn't, but I know I've done my research, and I'm okay with that. Now, sometimes people see the word trend of up or even or down. If you're seeing words and not this little graph, that is a preference setting. And the preference setting would be going back up to Tools and Preferences and seeing the trend display as either text or graph. So we'll keep it at graph there. All right. So sometimes when we're looking at this chart, before we leave this page, I want to point out one more thing. Sometimes we see a company with data that has a bump in it or is not like the others, or in this case, an especially low rate that's pretty far back in the past. We can exclude that data by simply clicking on the year. And we're going to do that and see that those dots go away. The growth lines actually recalculate, and we see an indication that that is gone in two ways. This number, the year number, is grayed out, made lighter, and we also see it crossed out over here in our table. One thing I want to point out, I mentioned you saw the line change position a little bit, and our growth rates here are recalculated. So don't be afraid to take an outlier and or put it back in and play around with that. Typical uses of outliers are, just as I'm doing, taking out something that doesn't seem to be like the other path of the data. Sometimes a company will have a one-time event that shows up in the data. Starbucks is a great example, and you might just want to take that year as an outlier. Sometimes people take the last couple of years, maybe even up to 5 years as outliers, and then they can see what the new growth rate is for the more recent period of time. There's an alternative way of seeing growth rates in the tool that I will show you when we get to forecasting. So again, I can click these on and click these off. One thing I would like to point out is that we did have a question come through about some evaluate management or quality items, and as we're going through these quality fundamental quality items here, one of the great things that you can do is compare them to peers. So for example, it might be that a particular industry happens to have a lower pre-tax profit margin than the pharmaceutical industry here. And I'll point out like grocery stores or gas stations usually have very low margins. So these numbers look spectacular, but how do they look against other pharmaceutical companies? That's where the peers come in. So we're going to click on the Compare to Peers button right here. It's going to bring up a panel. And in that panel, we'll have 3 companies, up to 3 companies. Sometimes there's less, but generally you'll find 3 companies here, and they are default companies. And what that means is there's an algorithm that picks them. They are companies in the same industry, not just sector, but the same industry, that are of a similar size. So we have large companies here that make a lot of money every fiscal year, above 10 billion are large companies. And then they're ranked by earnings growth rate. So these are my default peers. And for the most part, I am okay with Novo Nordisk, Gilead. I would like to swap out Amgen for something else, for Celgene. Now, how do I know that? I have done some research previously. There are a lot of different websites that will show you who the peers are, and we'll hit one of them so I can show you that. But let me just bear with me. I'm going to put Celgene in here, and it's one of those entry boxes that if you don't know the ticker, you can start typing the name. And here I see Celgene. And then what I would do is just update my study to get Celgene in there. That way the next time I open the study, Celgene is always my picked peers. Okay, so much like the legend on the home page, I can click peers on and off. So let's take a look at sales, for example, as our example. Biogen is my dark green company, and sales is green on the front graph, so sales is green here for my company under study. I see all of the company's graph and all of the company's actual data. So here's Biogen. Let me click on, here's Novo Nordisk, and they have a 10-year growth rate of about 11%. Gilead had some spectacular growth, but is actually declining in revenue. And their historical growth rate equates to be 26%. And Celgene had some pretty good growth rate in the past. I'll turn off Gilead and Novo Nordisk. So you can see them climbing way up. They've got some pretty good growth rate going on as well. So in that way, we can compare data. Let's talk about, and we have 9 different items that we can compare data on. So sales, earnings, pre-tax profit margin. So this can be informative here. So here's Biogen in black, and here's Celgene in purple. So Biogen makes more money on every dollar than Celgene does. Let's see how Novo Nordisk does. About the same. We can see it visually, and we can look at the table here. Let's look at Gilead. Gilead makes more money. They've got, here's Gilead, almost 60%, 66%, and then their numbers are coming back down. How much? That's where we can mouse over. over again and see what those exact numbers are for the quarters. Celgene, we already looked at them. Let's look at debt to capital. So I'm going to look at debt to capital here. I'm going to turn everything off. Remember, debt to capital for Biogen bumped up in the last year, and this actually tells me that they're doing a nice job at paying that off after they took on that big slug of debt. But how do they compare to Novo Nordisk? Well, they have more debt than Novo Nordisk. They have less debt than Gilead. Gilead's debt is going up and up and up. Compared to Celgene, less debt than Celgene. So you can see some of the reasons why we were attracted to the Biogen as a company. We'll talk about PE and peer comparison when we get back to that, looking at high and low prices. But don't forget, especially for these data items, for return on equity and debt and pre-tax profit, to check against peers. Okay, so moving on, before we get to forecasting data, do we have any special questions, Ann?
No, we do not. Backroom is doing a great job at keeping up with the ones that have come in. Okay,
great. Let's go and forecast our sales and earnings. So those of you who might be new to the methodology, I'm moving pretty quickly. And this is not a class about judgment or necessarily the SSG methodology, but we are working through it. So the concept here is we pick growth companies, we make sure that they're quality growth companies, and then we forecast sales in order to help us forecast earnings, and then which helps us forecast high and low price in the future. And Ann's probably cringing in the back because I've simplified things to 3 sentences, but but there we are.
Simple is very good. Simple is good.
Okay, so let's start with forecasting sales. There is a bit of a, to paraphrase one of our webinar titles, there's an art to the judgment of, we use the word forecast, we use judgment, we use projection kind of synonymously. So the thing here is we want to, based on the information in front of us and the information that we can research, we want to forecast where sales might be 5 years in the future. We know that you're not a magician, so we're going to base this, you can't know the future for sure, but we have a lot of reference points that can help us. We have our history, and in quality companies, management really tries to have stable performance. We have peer growth. In general, what is the industry doing? And sometimes this can be very helpful to compare growth in peers if you're seeing a problem. So I'll bring up one of the companies that we follow, which is Fastenal. So Fastenal is having a harder time growing right now, but so are its peers. So you've got an economic condition impacting that industry. And so comparing to peers can help you sort out some of that, what's going on here kind of concept. In addition to history and peers, we have our analysts' consensus estimates that we can use as another reference point. We have our recent quarterly data. So I am looking at 10 years of history with a 15% growth rate. I'm looking at much lower growth rates, forecast by the analysts of 5%. Last quarter, they did 6.4% year over year. If we want to use more research points, we have a research tab up here where we can look at other analyst estimate sites and get an idea. We can go to the company's website and see if under investors that they might have a presentation. Yes, they do, that we could look at and see company presentations. Often investor presentations will give us some idea of what the company, how the company is wanting us to think about growth rates. And finally, one of the other things that we have from our community that we can call upon are the member sentiment numbers. And what that is a listing of studies completed where all the judgments, projections have been made to for the past 90 days from members of our community. And what I see here is just a raw list. So the point is that you would get a gist of what other people are projecting. I'm not going to say take any one particular number. If you select all of these, there's a little select button here, and scroll to the bottom, we'll see what the average is, 8% for sales and almost 9% for earnings. You can see, like, let's say you feel this person whom you don't know, they could be a beginner, they could be an expert, you feel is too high. So let's take that number out of the calculation. So again, please just use this to get a gist of what the community is saying and as a reference point. So I'll tell you what, I did a first cut on this company. If you're not familiar with first cuts, take a little time roaming around the Better Investing website, and that's a pretty valuable resource there. I did a first cut, and my projections is what we'll use tonight, and they are very conservative. So take that with a grain of salt. I used 5% as my sales forecast. I said growth is slowing. I got that indication from research and so forth. Now, how do we go about the nuts and bolts of forecasting? So let me scroll down a little bit, and everywhere we see a green outline is where we're going to enter data. So I'm going to click in here, and it's going to bring up a panel where I'm going to enter my sales forecast, and that's as exciting as it gets. Now, remember when I said my forecast, we will see it up here. So here my dotted line has moved up, and we can see how it compares to the analyst sales forecast. I'm forecasting from the last quarter. So what I want to just double check is visually if this all makes sense compared to history and so forth. Yeah, it's less growth than they had in history, but as I said, it's pretty conservative. As we're going through this, one nice little exercise is I want you to mentally think, oh, I would have chosen something more or less. Are you about as conservative as I am, more or less? And start building that practice. Okay, so sales are the top line of the company. You have to have sales to get some kind of earnings. There's some ways to manipulate earnings, but you know, they're the core of what we want the company to show growth in. Earnings should follow sales. Here we see earnings growing faster than sales, but we're going to do earnings next, and sales is going to be our help. So we're going to click in here and forecast earnings. Now, am I going to make this up out of, the top of my head? No, I'm going to go to those reference points. I have my sales number of 5% in my head. I have the analyst estimate here listed again of 8.7%. And in the SSGPlus, I have one more tool in addition to the references that we had for sales. So remember sales, we had what was the history, what do the analysts say, what are my peers doing, and so forth. We have the preferred procedure calculation. And if you're a Plus member, you have a nice little class on how to work the preferred procedure calculation, but basically it is a business model or a mini income statement. So if I'm going to grow sales at 5%, I might have $14 billion in sales 5 years in the future. I'm going to back out what my expenses are. And I do this by applying, what the average pre-tax profit margin has been. I have a nice little piece of history here in these panels. I can click on the pre-tax profit margin and get a reminder of how it has changed over time. And what I'm seeing is that it's continued to get better and better, bigger and bigger. And I also see the last 4 quarters, or 3 quarters, are about, they're hanging around mid-45s and so forth. Now, I have done my research and seen what the company is projecting, and in my first cut, you'll see that I actually changed my pre-tax profit to 46%. In general, would I be that bold? If I didn't see this clear history, no. So do your own research there, and again, oh, I would never have done that, or oh, okay, I might buy into that. Taxes, I generally don't touch. The corporate tax rate has remained pretty steady, and we generally see that in the later years the tax rate's pretty steady. Shares outstanding, they have steadily come down. Remember, we saw that visually, and when I did my research, I saw that the company had a huge intent to buy back more shares. So I think I took this down to something like 214. And when I click through all of that, maybe it was 214, I have about a 6% growth rate projected here. So I use the preferred procedure to come up with about 6%. Now analysts are saying 8.7, and the reason is they are projecting even a little bit better profit margins and a little bit more share buyback and maybe a little bit more top line growth. So that's how those numbers differ. But I'm going to take my preferred procedure growth calculation here. Now other thing I want to take a look at when I'm looking at earnings and how earnings growth, how they've trended over time, I have these two trend buttons. And I can look at going from the maximum number of years to very recent. I can see that sales growth rates have been steady, then growing, and have recently dropped off. So that goes part of the reason why I'm conservative here. Earnings growth trends are the same. They were lower, they were higher, then they dipped down, and then they came back up, and they're leveling back, or they're dropping. So just good information that more recently they're dropping, but I'm going to stick with my 6%, and simply I can either take this number directly. I could actually enter my own earnings per share growth rate. Let's say I wanted to put in 10%. I could put in whatever number I wanted up top here. But I'm going to use my preferred procedure calculation and then click Update Study. So that's the gist of it. Every place there's a green box, you put in your number based on your references or your research, and you click Update Study. So we've made our first two projections. Okay, moving on here to where we're going to take a look at our PEs. And the PEs, which is the price to earnings ratio, help us evaluate the valuation of the company, and they're going to help us pick our high and low price, or project our high and low price for the future. And the way this page, or this tab, is laid out, up at the top we see a historical set of data for price earnings ratios, and then we'll go on and make some projections, again with those green boxes. So what the premise here is that I'm going to take an average high PE that the company has been trading at, or not, that might trade at in the future, sorry. I'm going to get this. This is one of my projections. We're going to take our high earnings per share number that came out. I'm going to blow that up a little bit. We're going to take our high earnings per share number that came out of our previous earnings growth calculation and simply multiply the two of them to come up with a forecasted high price. And then we're going to help evaluate a low price. And then, so in order to make this average high PE calculation, I'm going to look at some of my reference points again. I have history. These are my average high PEs in this column here, labeled D. This just gives us a nice reference that the company has traded at. And we see 23, 27, 38, 29, 31, and so forth. Here's the low PEs for that particular year, and so forth. Here is our average price to earnings ratio that the company is trading at right now. And here is the midpoint, or the average of basically these two numbers, the 30 and the 17.6. I can look at all this visually as well. So what I see here, let's break this down. 30 is my average for the past 5 years, but it's now trading at 18, and I also remember the way that price graph looked on the front. So I want to take a longer term view. I have a 10-year view of PEs right here, and we see high and low PEs on the same graph, and what I see is that they were very high back in '06. They've trended downwards, and if I mouse over, I can see lower PEs. Now, we see in the last 4 or 5 years that, they're kind of working around this average of 30. I have noticed that the price in the last year has been significantly lower than this 30 PE. I am more inclined for this company, and I explain in my first cut, to choose lower PEs. And I'm going to go back to numbers we've seen in the middle here. So this company is, I had to make that decision, and it goes to the conservative bent that I took towards this. But what I said was, I feel more comfortable with numbers that I saw previously. I see the price coming down. I went with a 22 for a high PE and a 13 for a low PE, which is really reflective of data that we saw about 5 or 6 years ago. Now to make that projection, I'm going to click in my green box, and I'm going to put 22 in this box, and I'm going to click Update Study. Well, I can click here and see that potentially my stock might go up to $521. And I see that here. Now, don't pay any attention to this until we get to the end of our projection. Now I'm going to project a low price. And I click in the green box. And wow, I have a lot more options. So let's talk about those options. I can simply pick a low price. Generally, we would look at history and say it's unlikely that the stock might go below a certain number. And you can enter anything you want in there. Our default, what we suggest as the default, is picking a low PE and using the low earnings per share forecast. Now I mentioned I did this, and I picked 13 as my low PE, and my first cut explains that. I have some reference points listed here. I have, the current PE looking at me, the average low over the past 5 years, which was as high as 17, that 23.8 number, which was the overall average of the last 5 years. But again, I'm going to be conservative. I chose 13. Low earnings per share forecast. This is for the last annual, this is the earnings for the last fiscal year, the last annual number. I'm going to give this company some credit. It's still growing earnings, and I'm going to replace this with the number I see right here, 17.7. Now you saw me type it in. I can also click directly on that number and have it come in this box. And that 13 times the 17.7 gives me a potential low price of $230. And when I just looked at this again today, and it went a little bit below that couple months ago. So this is a pretty, even though it's lower than where the stock is trading right now by quite a bit, it has been there fairly recently. So I'm pretty comfortable with that price. Some other reference points here that we have, it traded as low as 223 in the last 52 weeks. It traded in fiscal year 2015 down to 254 and down to 270. The stock prices on this stock have been coming down, so that's part of what we're seeing here. So this is really one of the most commonly used ways to forecast a low price, and I'm going to click and update study there. And then we see that my primary judgments have been made. I have sales, earnings, a high price, and a low price. And at that point, our zone, whether it's potentially in a hold zone or a buy or a sell zone, become valid. And I have a bunch of calculations. So the zone here is a way of showing the breakup of the distance between the forecasted low and the forecasted high. We break it up in, with the majority of the space in the middle and 25% of the space at the top and 25% at the bottom. And our current price is indicated here. So this is showing me that based on these calculations, and this is my SSG, it might not be the way your SSG is projected, that it is a hold. We'll also put it like a numerical value on where that, let's look at the picture here, as a measure of how much of a hold is it. I'll just say it that way. There's 2.2 times more distance to the top than there is to the bottom. We're really looking for this number as a guideline to be 3 to 1 or larger. Does that mean you can't buy if it's smaller than 3 to 1? No, it's just considered a measure of risk there, a way of quantifying how much of a hold it is. Okay, so having said all that, we have our quantification here of 2.2. If we bought this stock at today's price, regardless if it said hold or not, we also have a number here that tells us what our potential total return would be if it made it up to that 500 and what was our high price? $521. We might make 10% on our money. This is not a guarantee, of course. So, but it's a way of putting a measure on what our potential return might be. So if you have two stocks that you're doing a stock selection guide on, you can compare and contrast those numbers. If this stock had paid a dividend, we would see what the current yield is, and that yield, that dividend may add a little bit of extra return to our overall potential appreciation, but in this particular case, we don't see that. If you did have a company that paid a dividend, you would want to look at how much of that dividend was paid out as earnings, and that is the number called payout, as a fifth and final judgment point. But we don't have that point. And so we'll continue on with the number that we have, which is about a 10% potential return. So I got a question here that's really about methodology. There's a way of breaking the zone up that's a little bit different. If we click, we will see the zoning in thirds. And breaking the zone up into thirds puts this company technically into the buy zone. So my preference is to use the more conservative 25, 50, 25, and that is the default. You can change your default in the preferences. I would say just be consistent as you evaluate all the stocks that you're comparing against each other. Make sure you're consistent with your zoning. So you're not comparing, something that says buy with something that says hold, but the zoning is set up differently. Typically, we pick and we don't touch it. And if you go up to Tools and Preferences, here's where you can set your zoning default. Every new user comes in with a default of the conservative 25, 50, 25. So before we move on to some of the other features of the program, Ann, do you have any questions that need to get addressed?
We do not. Well, there is a question. Somebody has observed on your study that you have a big yellow box there, that you haven't saved the study. And
perfect segue.
I thought so. There you go.
Yes.
Thank you for that.
Yellow box.
Yes.
Right. Thank you for that question, Ann. Perfect segue into some of the final features that we can show you about the operation of the tool. So you've done all this work. This big yellow box is telling me I have not saved the study. Typically, I do a fair amount of work before I save it to make sure it's worth saving. You might be the type that likes to save it right off the bat. Either way, at some point, if you want to save the study, you have to click the box or do File, Save. file, save to my studies. I generally just click the yellow box, and when I do so, it brings up a panel that shows me the default study name and lets me change it. I could add, add to this. I can erase the whole thing and put whatever study name I wanted in there. And when I'm ready, I click on the button that says Save. At that point, we see the study name here in the bar, along with the company and ticker. So we get a little bit of extra text showing there. Now, I did show you a little bit of the file operations here. Save to my study does the same thing that I just did. Copy study says, well, maybe I want to do a different version with more conservative or more aggressive judgments. I can copy it, and it just creates a copy in my account and has me working on that second copy. So we'll see the name change here to copy. So now I'm working on the copy. Other options that we can do are we can export this into different formats that are compatible with Toolkit or Stock Analyst. Those are some of our older desktop tools that were manufactured or put out by iClub. And so I know we have some people in our audience that still use those. So this is a way of maintaining compatibility. If you're in a club and some people are using tools, you can export a file. So let's say I want to export this in the ITK file format. I click on it, I save it to my computer, and I somehow get it over to them. I'm going to show you a much easier way. We're going to share the study. And this will share it by email automatically. So I can give them a copy of an online study. I can give them all of these options, including a quarterly growth trend data report, by simply sending one. I'm going to, again, pick Ann. So let me go back and redo that. This is my name. I can say what kind of data I'd like to share. Then I select my recipients. I have a number of people in my online address book, so you can add people to your online address book. You can delete them. And then I can add a personal message, like my study from the webinar. I can send one of these options, or all of them. That's sometimes a question. The online study sharing option comes up, and at the other end, the person clicks a link, and a copy of my study goes into their account. There's no exporting for me. There's no importing for them. It just gets copied seamlessly into their account. If they change their copy, it has no ramifications on my study. It's just it's a duplicate. They can continue to work on that study any way they choose. All right, we can go ahead, Ann.
Yeah, we have a question about saving after you've made changes. So Lisa's asking, if you've changed one of your judgment items, does that save a completely new study, or what?
No, it doesn't. The way the saving works in the program is that you're always working in a study, and so if let's say I change my earnings per share growth rate here, it just saves it within that same study. I don't have to copy it or resave it. It just, at this point forward, just keeps an online record of the study that I'm working on.
The current situation.
Yeah,
so
the current situation.
It's automatic. Once you got rid of that yellow box that said, hey, your study's not saved, then everything changing after that is automatically saved, correct?
Right. It's kind of like the intent is I want to keep this study, so the background in the cloud app keeps track of it for you. You don't have to keep resaving. You don't have to keep saying save to my studies and so forth.
I hope that answers your question. Thank you.
Okay, a couple other things that we can do here. There's some links back to the My Studies library or the stock screener. Those are the same links that you're going to see over here. We can look at the data and change the company basic data. If for some reason I wanted to put a different prepared by, I wanted to manually update the price date, I can do that. I would make my change. Let's say, the basic shares, I would update those to 217 for some reason. I would update and it would save the data. In a similar manner, I can update or even add another year on my annual or quarterly data. To change any previous data, I just click into the cell, replace the number, and update my study. So I hope you're seeing that same concept. When we make changes or we make forecasts, we update the study. Okay, if we want to add a year, I click onto the new row and I start typing, and it will automatically populate the year. And then I can put, whatever my low price is. This is most typically used when you're waiting for an update to populate the database, and you want to go and add your own number by yourself. The other thing that I want to point out right here before somebody asks is if you update the study later, will it overwrite your changes? At this stage, yes, it will, but with our next release, I'm hoping we will have a lock function, so it will no longer, you can say, no, I never want that row updated by anyone else, by the automatic updater. You'll see that every row that I have changed something in has a U, which means there's user modified data in that study. That is unique to your study and this one study only. No one else, if they open a Biogen study, they don't see it. So it's just unique to this particular study. So you can update annual and quarterly. Let's say I wanted to refresh the study data, meaning a new quarter has come in or something and I want to refresh that. I click on the refresh button and I have a couple of options here. I can update just the stock closing price and click on refresh data. I can overwrite the company data and the stock closing price. That's the most typical use, like when a new company comes in, and we'll see that next quarter. Now you saw that annual data get overwritten. So like I said, we're adding a lock data function, and that should be just a month or so away. So also refresh study, during the process of updating, you can create a copy and say, maybe this is my update. And once again, this is we'll see this update study come in. So those are your data options. We have some printing. Well, you know what, let me answer this question before, which is on updating. What time are the prices added? The prices in the tool are the previous closing day's price. They will come in about 5 a.m. the next morning. So about 5 a.m. in the morning is when we load the new data. We don't get it from Morningstar till about midnight or 2 a.m., and we have to go through some processes. How soon after a quarterly update does the data come in? So we're in earnings season now. And what I would say is for larger companies, it's within a day or so of when the press release comes in, or when the 10K or 10Q is filed. So another question we're going to hold off on a little bit. Let's go through some of our other menu options. There's a print. That's the only thing going on here. There's no, things you can pick, and what that will let you do is print a stock selection guide in the traditional format. I just hit Generate PDF. It does take a few seconds to get done, maybe 10, 15 seconds. Here it is. And let me open that up for you when it's done downloading to my computer. And there is what we'll call like the paper version of the form with 2 pages. And if this is a format you're familiar with, everything is in the same spot that you might be familiar with there. Okay, research. Now we have a whole webinar on research, so I'm not going to, you saw me use it a little bit. All of these are free links to other sites, and they're ticker based. With the exception of like our link to member sentiment, you can open a company research. You can go to the company's website. Remember, we did that. And it opens up Biogen's website. You don't have to search around. So let's say I choose the analyst estimates option, and I want to look at the NASDAQ analyst estimate summary. So it's going to put me and open that in a different tab. And the nice thing is it's going to put it right at my fingertip. I don't have to search around for Biogen or figure out where to enter a ticker. It's ticker specific already. So please search through that. I do want to point out I'm a huge fan of the SEC official filings, and this is a really nice way of getting at the official filings. So 10Q are quarterly filings, and if I click there, again it opens in a different tab. It's very quick, and I see all of the official filings, including the one for Biogen that was just entered October 26th. So check that out if you want to see the official filings. Some tools, we've actually talked about all of these but one or two. We talked about preferences. We talked about resetting the chart, which is the same as this button here. We talked about sharing studies. There is a notes function. We covered this in our research links class or easy research class. I can click on notes and put new note here and say this is my new note and put a description in and save the note. So hopefully that's pretty logical. Then your notes are there for the future. You can have as many notes as you'd like. There is, I think, a 1,000-character limitation on the description, but it should be enough for you to copy and paste relevant paragraphs in. And it's always with the study. If you copy the study or share the study, then the notes go with it. So like I said, if you copy it here or you share it out to somebody else, your notes will be there. You can also print with notes and append the notes. So let's see. That would end up being a 3rd page. Whoop. And let me open that up. And we have the first 2 pages of the SSG, and then the 3rd page is whatever notes I chose to put on there. So you cannot move the notes window around, and the reason for that at this point is that on a tablet it becomes problematic, and then the scroll bars here, I was just talking to our developer about this, the scroll bars there are actually problematic on some of the tablets. So this is one of those pop-ups that you cannot really move around. All right, let's also talk about our last thing here, quick navigation. Now, if you're doing a lot of studies, you're going to grow to love this feature. This is a way of navigating between different studies without going back to the My Studies tab. That can take a little bit of time. If I hit quick navigation here, I see my most recent studies in a list. I can also start a new study here. So let's say I want to do a CVS. I can just start a new study directly. If I want to search my saved studies for CVS, I can type it in and see all of my saved studies there. So, you know, I could type in here and see if I have all my previous Biogen studies by typing in BIIB, and then I can go right back to that study we started out with that I had named webinar. Okay. That is pretty much the nuts and bolts of getting a stock selection guide done in the SSG Plus tool. I want to address a question from someone that said she sees the core button here. You know what? We are in SSG Plus as indicated by the logo and the number of tabs. But if you have SSG Plus or the Plus membership, you can go back to core. And here's a reminder that I just click on this button to switch, and it will show me this study with the exact same judgments just in the core view. So if you're showing off to somebody else about the stock selection guide methodology, or you're teaching them, or you just want to show them core, know that you can switch back and forth. It doesn't change any of the data behind the scenes, so it's just a different view. Core, remember, has less features and functionality, but it's just a different view, and that would be how you'd switch. I do want to point out you can go back to my study screen here, and we will see if I sort by date created my Biogen studies that we created tonight. So there are some icons here I want to point out. We can update the study from this view. We have the same options that we had while we were in the study. I can edit, and really that is just about editing the name. We'll also use that when we set up portfolios to put the number of shares in. I can delete the study. So here's my my copy. I'm going to delete my copy. Hit the trash can icon, ask me to confirm, and I do OK. And then my copy is gone. I can preview it. So let's say I have a very old study and I don't remember what that company looked like. The preview data lets me see a little mini SSG visual analysis on the front. And then I have a way to create this little wrench, lets me export in toolkit format. There was a question early on about how we can import from toolkit. At this point, we can import single files by clicking on this Import Toolkit TK6 study, and that would be the ITK file format. Shortly, we're going to have the ability to import multiples through either a toolkit backup called an ITB file, or the whole toolkit library which is a MDB, like Microsoft database file. So that's coming very shortly. I was looking at that functionality today. So are there any more questions on the My Studies section, Ann?
Not on my studies. There have been a number of questions that we really haven't taken out loud about portfolios and how to deal with them. And maybe when you get to your help screen, when you talk about that, you can point out a useful webinar where they could review some of that functionality.
Sure. I'll point out live that the help screen here is accessed by this little question mark. We'll go to it live. You'll see a view later, but there are all kinds of tutorials here, and including how to run tutorial reports. There's a portfolio report. There is a portfolio quick start guide, as well as guidelines about how to use the portfolio summary report. So those are all very helpful information. This page here has a ton of reference materials on it, so if you please roam around and check that out. Anything else similar?
No, we're just recently now getting some questions about handouts. Handouts are in the webinar panel. You can download them today, and we're also going to be uploading them along with the webinar recording on our BI website.
Yes. And there's another question here. Are these tutorials only available for SSG Plus members? Actually, all of the tutorials are posted on YouTube, and the webinars that you see tonight are available to all. So it's not, we want to get the word out about the tools. You don't have to be a member to see these particular webinars or the YouTube videos. Let me go back to my PowerPoint now, because I know we're have run out of time, so I appreciate everyone's patience here. So what's next? I talked a little bit about toolkit data file imports, but we're also adding more screening options for the SSG Plus. We're going to add in the Morningstar growth, profitability, and financial health grades pretty soon. We are going to be able to put a library or backup file from Toolkit, so you can do multiples at one time. So look for those pretty soon. We'll also have a webinar upcoming that explains what's new in tools. This is another view of that help and information screen where we see the webinars, the quick start guides, and other reference materials. So be sure and check that one out. There's also a link to our frequently asked questions forum and a feature request forum. If you need more information about how to forecast or about the methodology, here are some great references for you. So for Better Investing members, we have a series of digital or online classes called the Introduction to the Stock Selection Guide. I will also point out that our national convention is a terrific way of learning more about better investing, what we do, the stock selection guide methodology, portfolio management, lots of great stock ideas, and that's going to be in Cincinnati, Ohio in May of 2017. You can look for a mentor from your local chapter or your investment club. You can look for more information in the Better Investing magazine about the methodology. So we have a number of great resources here on various areas of the tool that we were not able to get into in depth tonight. I believe I mentioned all of them as we went along. User feature requests, we're always happy to hear what people want. I'm not going to guarantee that features are automatically added to the tools. They go through a pretty robust process, and we also have to work them in with the other normal work that goes on at Better Investing. But happy to look at them and categorize them and see which ones are most popular. Our FAQ site answers some common questions, and let's talk a little bit about upcoming webinars. So Ann, you've got a Ticker Talk webinar next Wednesday and a Buy the Best webinar Thursday, which is a Plus member benefit. I mentioned our online tools, what's new in online tools webinar, and that is Thursday, December 15th. So watch your email for future announcements, and we hope to see you guys all there again. So if there's any last questions, please let us know. If not, if we didn't get your question answered tonight, we'll attempt to follow up and send you an email within the next day or so. And other than that, I thank you once again for taking the time out of your busy lives to attend a live webinar here. Thank you.